Well, it's a great day. I'm Dean Jones, President and CEO of Realogics Sotheby's International Realty. Welcome to Market Perspectives. This time we have Jolene Messmer, loan originator extraordinaire with Movement Mortgage, our preferred lender, also known as Lady Loan, Mama Mortgage, what other?
Lady Lender.
Lady Lender, I like
Mortgage
this.
Mama.
Well,
Mortgage
you are
Matchmaker.
hustling. You are hustling.
Yeah.
Tell us what's happening so far year to date in 2026 that our audience would want to take note of.
The numbers just came in from January, now that we're February. Last year in 2025, we had interest rates at 7%. You remember that, right?
I do remember that.
Today, we're at 6%.
Wow.
So that is a really meaningful difference to home buyers and sellers. It's giving us more leverage for homes to come on the market, buyers to re-enter that were kind of on the fence, waiting to see what was going to happen. So for this month in January, our leads went up 256%.
Wow. That is a telltale signal because a lot of times that first wave of demand comes through mortgage underwriting, qualification, and so your indication so far in January suggests what for the market?
What we see now, the phone calls I get the month of January, the loan applications that coming in are going to come into closings in March and April. So what it's saying is people woke up and said, what are my goals for 2026? And they're like, I want to buy a home. So guess what they're doing? They always start with us, right? How much can I get pre-approved for? What's the strategy? Do I need to, can I buy before I sell?
Right.
Which is the big question.
So the last couple of years has been defined by a lot of wait and see, and I got the sense in talking from you and your partners that, we're waiting for these mortgage rates to come down to a certain point where I'm going to become a buyer, kind of make me make a move. It seems now like there's not enough reasons not to buy. We had some decent reporting for the year 2025 where home prices were very stable, if not rising. And the volumes are anticipated to increase because mortgage rates have come down. What are some other reasons why you feel more would-be buyers are making a move right now and maybe would-be sellers are planning for them?
Yeah, I would say that the forecasters are all in agreement that interest rates are going to be very flat this entire year.
Okay.
So what does that tell a buyer? It says, I can buy now and get a 6% rate, or I can buy in October and get a 6% rate. So it's probably better if I buy now at a lower price than waiting for prices to increase throughout the year. So that's what I also think is they're at peace with where rates are at today.
And they have some better selection because our inventory levels are rising. They're getting approved by you in advance so that they can strike quickly when that right opportunity shows up. And I think waiting too long might require you to digest less selection and more competition. And so that idiom about, you are married to the strike price, but you only date the rate. How would you apply that going forward? Maybe now is a better time to secure a better strike price because if prices go up 12 months from now, you can always refi, but you can't rebuy.
That's exactly right. A lot of people are buying the homes and getting a mortgage with no rate buy down. I have very few buyers exercising a permanent long-term rate buy down because we all do feel that in the next 2 years, not 1 year, the next 2 years, we could see a dip in the market. So most of the break-evens happen between 3 to 4 years to even break even on the cost to buy down that rate.
Okay.
But we think where there's going to be an opportunity to refinance and we would never recoup that period. So most buyers are saying, great, I'm going to buy today. I'm happy with my 6%. And hopefully Jolene's going to call me in 2 years and offer me a $500 monthly mortgage savings when interest rates go down.
And it seems like prices have been fairly sticky, notwithstanding the more modest number of buyers of the last couple of years and the increased number of sellers. What we have to remind our audience is there's not much distress out there. So if a seller doesn't like the offer price or they don't think the market's there for them, they'll just rent the home or tread water. What can you say about the quality of the equity position in these home sellers today and reminders to buyers that they don't have to sell oftentimes?
That is exactly right. They've got about 60% equity in their homes. There is so much equity in everyone's properties that they're not forced to sell. Now, what I am seeing, especially in January, is my home equity line of credit consumer has picked up. I've gotten probably 3 times the loan applications in January for home equity line of credits. And most of them are for sellers who are getting some equity out to repair the property so they can list it in spring market. And then the other half is using that funds for a down payment on the next home so they can buy before they sell their property. So I have a lot of home equity line of credit activity because of this. And they're not getting, a cash out first mortgage because they typically have that lower rate and it's just a lower amount of money they're trying to access.
What do you think about this tax policy in Washington state and, impending creep of tax rates for either income tax and capital gains tax, which is already imposed? But there's increasing numbers of would-be sellers that are making a plan to establish residency in another state. Maybe it's Nevada or Arizona or in Florida. They could also pull a home equity line from their current residence, buy that second home to make that a priority in the future?
Yes. So, fun fact, yesterday on Monday, we had a brand new investor come to the market and they are offering better pricing only for investors and second home buyers. So what this is telling us is there's going to be a new appetite for our non-QM to offer better loans than Fannie or Freddie can offer because they've got the LLPAs that is increasing the rates for investors and second home buyers to making it a really expensive purchase, right? Especially compared to owner occupied. So the investors in the non-QM market that don't underwrite to Fannie, Freddie, and conventional guidelines are writing their own guidelines, producing their own pricing because they believe there's going to be a really strong market for that second homeowner and that investor for exactly what you're talking about.
Interesting. And you had recently filled a stadium with Matthew Gardner speaking on his predictions for 2026. What were some of your takeaways from that leading economic mind of his for the year ahead?
Well, I think he also shared what everyone else is saying about rates, which is the number one question I always get is what are interest rates going to do? And I think he was between 6 and 6.2 for the rest of the year. He also mentioned that home prices aren't going to be hitting double digits. We're going to see them more in the 4 to 5% appreciation.
But rising, okay.
Throughout the year, depending on where you're at. And he's just saying the applications are going to be up. The demand for home ownership is going to be up pretty dramatic from last year. So I think he gave us rainbows and sunshines and fairy dust and all the things I want to hear for my business to see what's coming this year.
Well, we have to remember we're also in competition with the future would-be buyers that are currently renting. And the city of Seattle famously has more renters than homeowners right now. And many of them are paying $4,000, $5,000, $6,000, $8,000 a month in rent, and they have restricted stock units that have never been worth more. So what do you feel is the propensity for those first-time home buyers to enter the market in the next year or two?
I had a few clients here last month that are trading in their RSU stock to put it towards home ownership. And normally people want to keep their money in the market, but I feel like our younger generation is like, no, I actually don't want to keep my money there. I would rather purchase a home. And not only there's purchasing home, they're going to rent out rooms.
Yeah.
So they understand that we live in an expensive area and they believe in home ownership, but they also believe in shared living expenses. So they're making it more affordable for them to buy a home because they're going to have border income.
Speaking of the generations, what about the greatest generation and our elders that are looking at tax planning and their estate and maybe making some warm-handed gifts to their children and loved ones? I mean, are you seeing an increase of that kind of home ownership being helped?
Yep, I'm seeing a lot of gift for down payment coming in. About 20% is kind of the average we're seeing from parents giving to their children. So I'm seeing a lot of that, which is great.
I think the most pivotal takeaway that I have, Jolene, is that if rates are remaining fairly static, that waiting for a better rate is not going to result in a greater financial outcome. If what you and Matthew Gardner are saying is that home prices are rebounding and they're expected to rise with the increase of home ownership stepping up, then there is less reason not to buy. And maybe this early indication in January of you being so busy is because the spring sales season is actually going to happen this year, where last year it did not because of all the turbulence with tariffs and all the stock market volatility. So how are you feeling this spring is going to shape up?
let's just say I've canceled my vacation with my family. I am not going to have time. I mean, from what January is showing us with all of my increased in leads and my loan applications and my pre-approvals, it is going to be a really hot spring market. And, educating these clients how to shop for a home, right? When you're looking, you need to start a few months ahead of time. You need to, favorite your favorite homes, see how long they've been sitting on the market, right? Did they go for above or list or below list price?
Right.
So you have the confidence and education to know when you find the right home, you know when to pull the trigger and you know what offer price to actually put in that will actually win you that home. Getting our clients educated on that process, I think, is the most important thing, because their confidence is what's going to trigger this market for them to pull the trigger and make an offer and go forward.
Well, working with luminaries like you, Jolene, and the whole team at Movement Mortgage, our preferred lender, thank you so much for all of your service to our company and also for your platinum sponsorship of the Accelerate Summit on March 25th. Why did you guys lean into that educational program so heavily?
Everything that people are going to learn at Accelerate is all educational based. We actually have our Chief Marketing Officer, Jake, coming in to tell us what is your headline, and he is going to teach us some really unique marketing tips on how to create your own headline in our market. So Dean Jones, tell me, what are you most excited about for Accelerate, especially as a platinum sponsor for this event?
Well, like you, we're very passionate about inspiration, education, and activation within our industry. We were honored to be identified among other industry leaders by Ann Hartnett, the publisher of Seattle Agent Magazine. And this is the first of its kind since the pandemic, she has said for herself. And we've done other things together before, such as the FutureCast Forum last June, which was so much fun to work with you and the other lenders with Movement Mortgage and multiple other vendors and companies to collaborate. It remains an important part of our industry to come together and share best practices. At the end of the day, this is one industry that we all share together, and I just think there's more room for that kind of collaboration across the brands. We're all doing business together, and I think Ann Hartnett and Seattle Agent Magazine is very, very key influencer when it comes to our industry, so we're happy to support.
I agree.
So Jolene, I often enjoy your weekly saves. I'm sure they're more of a daily save where other traditional lenders were less flexible. I think of this as mortgage gymnastics, the Cirque du Soleil of lending.
Love that.
Give me some examples of where you've been able to step in and make a closing happen when others couldn't.
Yeah, I mean, I had a phone call today. So one of our clients got denied by a bank.
Okay.
And picked up the call this morning, found out that she has about 2.4 in assets.
Okay.
We get to use assets as income to qualify. So I say no income, no problem if you have assets. So if you are retired, if you don't have any income, if you're self-employed but don't meet the 2-year guidelines for being established, we can use all of the assets you have in every single one of your bank accounts, an IRA, a stock, a 401k, lump it all together and create income from it. It's technically fake income, to be honest, because they don't do anything. We don't say, hey, I want to see you deposit, $7,200 into your bank account from that account. That's not how it works. We create a formula behind the scenes that allows you to qualify. So when that bank said no, we get to say yes and help this consumer purchase this new home here this next quarter.
Well, another save the day moment from Movement Mortgage. Jolene, thank you for sharing that. I know there's many, many more behind the scenes.
Yeah.
Tell us also why Movement Mortgage is a company you can feel good about borrowing from.
I guess our motto is we put people first, people before profits. And the person who owns this company is Casey Crawford. He owns 51% and Movement Foundation owns 49%. And what we do with that 49% is we've got 10 charter schools where we bought the land, we built the building, we hire the janitors, we hire all the teachers. Every child has a backpack. They have childcare from 6 a.m. to 6 p.m. with meals included for free. So the purpose of this company is not to go out and buy my owner private islands and private jets and all the things that you would think happen in that world. It's to help our communities, educate our children, and give them opportunities they wouldn't have otherwise.
Well, we thank you for that service. The best is yet to come in 2026. Thank you, Jolene Messmer, Movement Mortgage. This has been Market Perspectives. We'll see you next time. Follow us on social media. Thanks again.
Thanks, Dean.